Hello and welcome to our Street View episode for March 2020. The world has changed and we're all sequestered in self-isolation and social distancing. But we can certainly share what's going on in the Toronto real estate scene. So come on, let's jump into the details. With all the fear and concerns over global change and what's happening in our markets, I felt that it was appropriate for us to share the details of what's happening in the Toronto real estate market, to provide comfort for those that might be concerned with where the market is at and where it is heading in the near term. So let's start with our recipe. It doesn't really change except the factors that are influencing it. And so let's dig into the details best we can. Starting with the supply side is the number of new listings in the month of February 2020. We can see that over on your left-hand side, we can see how that bar is slightly above the preceding years, but more or less in line, representing a 7.9% increase. And we can see how that's the seasonal norm that happens every year. Jumping into the demand side, we have the number of sales that have taken place in the month of February, and we can see that there's been a bit of a spike in the month of February, up 45.6% over the preceding year. And that really illustrates the ongoing story that we've had up until now about how it's been a very strong seller's market with a very low inventory and super high demand. So we'll talk and expand on that in a second. Let's talk about how it's influencing price in the month of February. It's up 16.7% to $910,000. And you can see how it's coming very, very close to the peak that we experienced in 2017. But certainly price and the number of sales is an expanding story that we need to drill into. Typically, we're always working from a month end to have statistical results. However, we do have the technology to produce a different styled report that gives us mid-month results. And so now I will interpret, hey, what's going on in the first couple weeks of March? We're just finishing technically our third week. And so the results are what I'm about to share. On the listing side, we can see that listings were up 38% compared with the preceding month. And I would say that's seasonally normal. We would normally see about a 42% increase in the number of new listings coming to market. And so that's still happening in the month of March. Next, we'll look at the number of sales. The number of sales has also experienced an increase of 25%. And when you look at this slide, you can see that maybe things are starting to soften in this week in particular. And so that month over month increase, 25%, normally we would see an increase in sales of about 40% that's in line with the number of new listings coming to market. So, and the month is not over yet. And so to draw a real firm conclusion on which way the market's going in that regard, I think it's natural to understand how buyers and or sellers are going to take a step back from the process at this particular point in time. State of emergency, open housing is now no more in our brokerage anyhow. Our registrar provincially is recommending that if you do hold an open house, there's set criteria that you've got to go through. I think, we've personally shut down any open housing. We don't want to risk the public and or our clients to the spread of the virus. But these are some of the things that are going on in the marketplace that are influencing the results. So as we see the results unfold at the end of the month, you'll start to understand some of the things that are happening that will influence those results. And that's all I'm trying to do today, is to create a good perspective on what's really going on. So we jump into price, and lo and behold, we can see price on a month-over-month basis. It's actually up 11.5%. And last year at this time, on a month-over-month basis, it was like 10.2%. So price growth so far in March is actually stronger than it was last year at this time, despite all of the changes that we're experiencing in our lives and in our world. Now, that's just in the first half of March, and there's still a couple weeks to go. And with the real change that we've seen happen just over the last few days, yes, we think that the pace of the market is going to slow and the pace of price growth is going to slow. And I think that's a very normal, reasonable expectation. But I just want to reassure people what's happening in the stock market is not happening in real estate. Real estate is never been traded like stocks and bonds and mutual funds where, the values drop 30% in one day. Real estate just doesn't work that way because it's built on strong fundamentals. And it's those fundamentals that are going to serve us very well into the future. And so let's spend some time talking about that. As we look down the road and what the future holds for each of us, it's a little uncertain, and that's for sure. As a practitioner in real estate over 14 years, I've experienced some, certainly market shifts, but nothing in comparison to what we are all experiencing today. And I very much have this outlook that I can see 2 days, 2 hours, 2 days into the future, but 2 weeks, a little bit fuzzy. 2 months, absolutely not. And, as we progress through this dynamic, please understand, we're fully engaged in monitoring the market on our clients' behalf on an hourly basis. And the insights that I've shared with you today are the best read and gauge that we have on the marketplace today. But I just wanted to highlight a couple things that we know are changing for sure in our marketplace, because I think these changes may be everlasting. And one of those things is that the open housing, public open housing, we've shut it down in our brokerage. As an industry leader, we wanted to be one of the first to say, look, we are taking these matters seriously. We are practicing social distancing. We want to flatten the curve. It hasn't been passed as law yet, but common sense would dictate that it should be. Certainly, showings are still taking place, and just a couple thoughts on showings. Our brokerage is one of the largest in the world, 1,700 agents, over 23 offices represented in the Toronto area, Barrie, Simcoe, as well as Ottawa. And we are tracking the number of showings that take place on a week-by-week basis. And as it stands of right now, showings are only down about 8%. And that's actually quite surprising given the scope of what is unfolding. And I'm sure that that metric will continue to evolve. But I also know from our own work that virtual showings, video tours are a popular and effective system to help buyers view properties and minimize the risk for our sellers. We also have with our legal trusted advisors, the Corman and Company Group, they have also helped with creating specific clauses that we can insert into agreements that help both parties stay on track as they work through the evolving environment in which we're working. And it deals with such things as, delay in funds, delay in closings, delays in inspections. And it's those additional layers of protections, the forethought that's going into it, that preserves our marketplace where people that have to buy or have to sell, we have a system for that. And speaking to the finance piece, I spoke to our mortgage professional, Shant. Many of you know Shant with the Dominion Lending Center, and he highlighted for me that with the interest rate reductions that the federal government has enacted and a full 1% drop in key overnight lending rates, which influences variable interest rates. So, we are moving into a very historically low interest rate environment again, which is meant to be a stimulus, right? To help those that are going to struggle with payments on line of credit. If you have a variable rate mortgage, those costs are going down on a monthly basis. But it also increases affordability in the marketplace, which helps people that are in this dynamic. The banks are also becoming more virtually based, so that mortgage brokers are in a great spot. Much of their business was done virtually previously, and moving into the future, more of it will be done so as well. And being able to consult with clients through video conferencing and through electronic signatures are becoming more readily acceptable and practiced amongst all practitioners. So once again, we can preserve the health and safety of clients and consumers, and at the same time keep commerce moving forward. It's interesting how the market is adapting so quickly, and the leadership that's being demonstrated on multiple levels, both in our healthcare systems and inside our marketplace. And that creates the confidence in Canada and being a Canadian. And I think we work well together. And I'm interested to see on the backside of this pandemic how Canada's scorecard will rank in terms of how well they dealt with protecting the public and our economy. And to that end, I see great optimism, a sliver of sunshine and far into that photo. I see the other side of this experience, like every life-changing experience we have, that there will be an after. And that after could be, a long path to recovery, yes, but a recovery nonetheless. And I think our market will be healthier because of it. And I think Canada will be even more desirable on a global basis because of how well we've done working together. And so with that thought, I want to wish you and yours the very best. Stay healthy and connect and look after one another. And if Madeline and I can be of assistance to you in providing insights or referrals to service practitioners, if you're needing assistance with getting groceries or prescriptions, if you're an at-risk demographic, we have resources in place for you as well. Just reach out to us anytime. And we are active on Facebook through social media, Emerson Group Realty. Inside Facebook, we will be posting additional insights, resources, and comments, and love to connect with all of you through that channel as well. So with that, I'll look forward to speaking with you in a few weeks where we'll have month-end results that'll be a little more concrete about the direction the marketplace is taking. I'm Matt Emerson of Emerson Group Realty. I'll speak to you then.